Hello and welcome to the My Solo 401k Financial My Community YouTube webinar series, our weekly webinar series. Thank you so much for joining. So we've got some great content today. Hopefully you find it useful. We're going to focus on the Solo 401k loan rules. So first, let me just start out with some brief housekeeping. Of course, if you have questions or topics that you wish to go over, please just chat it up and we'll go through those sequentially. Thank you all for joining. We do appreciate it. So again, we're here to talk today about the Solo 401k loan rules. We really want to make it a complete guide, A to Z, as far as how it works, considerations, many different frequently asked questions. So we've got a wealth of other information on our website as well, including it also helps to communicate this. So hopefully, again, this is helpful. Let me know if you can't hear the audio. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is it solicitation. When making an investment decision, please consult with your tax attorney and financial professional. All right, so if you're on the YouTube, please subscribe. You get notifications of all the upcoming webinars. For example, we have these at least weekly, sometimes bi-week, twice a week webinars. Recent topics have been how much income I need to be able to maximize my contributions, kind of the magic number. Another recent topic, oh, you can't hear me. Okay. Hopefully this works now. Let me test the audio on my end. One second, please. We're just going to verify the audio here. Thank you so much for your patience. So, audio here. Oh, thanks. Sounds like we hear the audio. So, yeah, we'll just keep going. So, other topics would be like Vanguard recently announced that they're exiting the Solo 401k business, like what that means. And we look to have more content on that topic as well. We had a great session regarding that content. We're going to talk about comparing us versus some of the other basic Solo 401k plan providers, right? The basic Solo 401k providers versus our plan, which of course is the opposite of basic. It's very advanced. So for example, a Solo 401k with us versus a Solo 401k that one might get at Fidelity or Schwab. We're also looking to provide some good step-by-step walkthroughs of how to integrate one Solo 401k with payroll providers, for example, Gusto. So please subscribe so you can get all the notifications. Even if you can't come live, you'll be able to access the recording. So we do appreciate that. So for today, we want to, again, zoom in, deep dive session regarding Solo 401k loans. Now we'll lay the foundation with eligibility, just in case someone doesn't have a Solo 401k, they kind of know what they need. They know exactly what they would need to be eligible. And then we'll continue to build on that, talk about the Solo 401k loan rules, talk about the mechanics of being able to take a loan, so the steps, and then we'll start to go through a lot of the different use cases, issues that come up, so we really can understand it A to Z. Now, resources would be our community. We go live every day at this time, 1 p.m. Pacific, 4 p.m. Eastern on our community. It's free to join. All are welcome. In addition to these daily 1 p.m. Pacific, 4 p.m. Eastern Zoom calls, which you can access at mysolo401k.net/my community. We also have 24/7 forums. We have library of videos and webinars. So that you can learn, right? It's a great way to share the knowledge, to hear what other people are asking about, et cetera, et cetera. So as far as eligibility, right? A Solo 401k is for an owner-only business with no full-time W-2 employees. So think like an independent contractor, could be a solo practicing attorney, CPA. So it's for a self-employed individual, again, owner-only businesses without any full-time W-2 employees. So that means, not working 1,000 hours or more per year, or 500 hours or more per year for 2 consecutive years. Now, of course, the owner can be a W-2, a spouse can be a W-2, and if those are the only W-2 employees, then the business would be eligible. The business could have contractors working for the business, and that business would still be eligible if there was no really non-owner, non-spouse, full-time W-2 employees. You don't need to have a formal legal entity in order to be eligible to set up a plan, right? If your business is taxed as a sole proprietorship, that's fine as long as you're reporting earned self-employment income on your taxes. For example, on Schedule C of your 1040. Of course, if you have an LLC or an S Corp for your business, that's fine also, again, as long as you're reporting earned self-employment income on your taxes. For example, W-2 wages from a self-employed business taxed as an S Corp. And no non-owner, non-spouse, full-time W-2 employees. So while there is no minimum amount of earned self-employment income that one would need in order to be eligible to set up a plan, of course, if your goal is to make contributions to the plan, then you're not going to be able to save more than you earn, but you could still roll over money from a former employer plan. You could still roll over money from an IRA. You could still take a loan, right, based on those loan rules. And of course, we're going to talk about that, or invest in alternative investments. In other words, you could still utilize the solo 401k plan. Your spouse or business partner can also participate as long as the spouse or business partner is reporting their own earned self-employment income. For example, each spouse has a separate Schedule C, or each spouse receives a W-2. A solo 401k owner can even have a W-2 job, can even participate in their day job 401k plan, as long as they've got that separate self-employment income that enables them to be able to set up a solo 401k. So now that we've laid the foundation in terms of who's eligible to set up a plan, let's start to talk about those solo 401k loan rules. So who may borrow from his or her solo 401k plan? So you need to have a plan like ours that would allow you to take a loan, right? Our plan does. It needs to be documented as a loan, right? You've got to pay it back according to the loan payment schedule. But the starting point is having a plan that allows for 401k loans, right? Like I alluded to, some of the upcoming webinars are going to talk about the difference between the solo 401k provided by My Solo 401k Financial versus ones that are provided by discount brokerages like Fidelity or Schwab, where those plans don't allow for 401k loans, whereas our plan does. And then, of course, you want to work with a provider like us that on top of that is going to prepare the required loan documents, which we do as part of our service for no additional charge. And we'll talk about the mechanics of that as well. So continuing to talk about the basics, right? So first you got to have a plan that allows for 401k loans. Then the question is, okay, well, how much can I borrow from my solo 401k? So each solo 401k participant is able to borrow up to 50% of the balance, not to exceed $50,000. So now it's noteworthy that if the solo 401k owner had a previous solo 401k loan in the prior 12 months, then that'll impact how much they can take as a second loan. And we'll talk about more of those multiple loan rules here in a few slides. But the starting concept is that in terms of how much I can borrow from the plan, it's 50% of the balance not to exceed $50,000. So let's take a simple example just to illustrate. Mark would like to take a loan from his solo 401k plan. He has a vested balance of $50,000. That means that the maximum amount that he can borrow is $25,000, right? 50% of the balance not to exceed $50,000. Now, if Mark had a vested balance greater than $100,000, the most he could borrow, right, would be $50,000. So even if he had $200,000, doesn't mean he can borrow 100. He could only borrow not more than 50 or 50%, whichever's less. So we've established that you need a plan that allows for loans. We've talked about how much you can take. So what are the other terms of that loan, right? The loan needs to be payable in equal monthly or quarterly payments. So it's up to the solo 401k owner, whether it's monthly or quarterly. It's got to be equal payments of principal and interest, with those payments spread over a 5-year term. Now, it's noteworthy that the term can be longer than 5 years if the proceeds are used to purchase one's primary residence. And again, we'll talk about that concept in a second, but just let's lay the basics down. So it's got to be equal monthly or quarterly payments, principal and interest, with those payments spread over a 5-year term. As mentioned, we prepare the required loan documents as part of our service for no additional charge. So that, of course, begs the question, right? What is the interest rate? Well, that interest rate needs to be a reasonable rate. And per the regulatory guidance, the interest rate is either prime rate plus 1%, or it could be a CD rate plus 2%. So a CD rate, for example, would be if someone was taking a $50,000 5-year CD or $50,000 5-year loan, and they wanted to use the CD rate plus 2%, what clients would do is they would determine the CD interest rate for a 5-year $50,000 CD. And then they provide us that information. They keep that backup in their own files as the plan trustee. And then we can prepare the loan documents based on that CD rate, right? CD rate plus 2. So it's either prime rate plus 1 or CD rate plus 2. Now, can the proceeds of the loan be used for any purpose? Yes, the proceeds of the loan may be used for any purpose, right? There's no restriction. So just simple common examples would be home remodeling, paying off credit card debt, college tuition, etc. All right, so now let's start to talk about some of the mechanics, right? How do I take a solo 401k loan? What are the steps to do that? So let's first go through a few slides here to really illustrate. So as we know, the most that you can take is 50% of the balance, not to exceed $50,000. So that means you got to look at your solo 401k balance, right? Because if you have, let's say, the accounts at a bank or at a brokerage, right? You could simply look up that account value by looking at your account statement. Or if you've got alternative investments, you might have to determine the fair market value of that alternative investment, plus say the value of your brokerage account at, say, at Fidelity or Schwab, and the total would be your account balance. Then you're going to determine the length of the loan. The minimum is 5 years. The maximum would be 30 years if used for a primary residence purchase. We'll talk about that in a moment, and you're going to want to complete the online questionnaire. So that's how clients let us know that they want to take a loan. And then when they complete that online questionnaire, that's what prompts us to prepare the required loan documents, which again, we handle as part of our service for no additional charge. So when completing that online questionnaire, clients have to tell us, okay, well, how much do I want to take, right? What's the term of the loan? Am I going to use it for a primary residence purchase, et cetera? And then once we get that data, we're able to draft the loan documents. Now, here's another good slide to illustrate the process. So, of course, you have to have money in the solo 401k because you're going to be taking money out of your own solo 401k. This loan is not coming from a bank. It's not coming from us. It's not coming from a third party. You're literally taking it out of your solo 401k, and it's not considered a taxable distribution as long as it's properly documented as a loan and paid back according to the payment schedule. So if you're just setting up a solo 401k now, you might not have any money in that solo 401k account. So the way that you would get money in that solo 401k account would be one of two ways. You either make contributions subject to the contribution limits, et cetera, the deadlines, and we're educating our clients on the rules as it applies to their exact situation every day, and or you're rolling money over to the solo 401k. This could be from a former employer plan. This could be from a non-Roth IRA. And we're helping clients every day to roll over money from pre-existing retirement accounts to their solo 401k. So once there's money in the plan that's now available to be borrowed, then again, you submit the online form where you got to know, okay, how much am I going to take, the term, et cetera. Then that prompts us within 1 business day to prepare the loan documents, which we send you an email where you can access it from our secure portal. And then you're able to immediately take the loan, right? So you can wire money out of your bank or brokerage account for your solo 401k. You can write a check, etc. So let's zoom in on some of those steps, right? So as mentioned, once we get the response back from the questionnaire, we prepare the documents within 1 business day. An email goes out where they can be accessed from a secure portal. So you download and review the documents, you sign the documents. So the transmittal email will specifically say where you sign it, etc. You upload the signature pages back to us, just so we have a courtesy copy in our records. Of course, you keep the master copy in your records as the plan trustee. And then you disperse those loan proceeds from the solo 401k bank or brokerage account. It could be dispersed by wire, by check, and it's going to go into your personal account. So even if you're going to use it to pay off your credit card debt, right? Taking one of the simple examples, you're not going to send the money to the credit card company, right? Because it's really a two different transactions. One is you taking the loan from your 401k. So for that first transaction, the money needs to go to your account, and then you're able to use the proceeds of the loan for any purpose whatsoever. So second step of the overall process, and really a second transaction, would be you paying off that credit card debt or paying it down at least. And then you're going to need to start repaying the solo 401k loan according to the payment schedule. Again, as part of that online questionnaire, we're going to ask you, okay, do you want to pay it quarterly, monthly, etc.? Then we prepare the loan payment schedule based on the answer. So when paying back the solo 401k, those monthly or quarterly payments are going to be made from your personal bank account, because it's your obligation to pay it back, to the solo 401k bank or brokerage account. Okay, great. So as mentioned, now we want to kind of build on these fundamental solo 401k rules and start to talk about more of the detail, maybe certain use cases, etc. So a common use case is using the proceeds of the solo 401k loan to buy your primary residence. So if the proceeds of the loan are used to buy the primary residence or buy your primary residence, the term of the loan can be longer than 5 years. So here we have a good FAQ to illustrate that. Can the term of my solo 401k loan be longer than 5 years if I use the proceeds to purchase my primary residence? So yes, when the solo 401k loan plan or solo 401k plan loan proceeds are used towards the purchase of a primary dwelling for the participant, meaning you as the solo 401k owner, the loan payback period increases from 5 to 15 or even 30 years to match the term of the underlying mortgage, right? Like you might be using the proceeds of the solo 401k loan to fund your down payment to buy your primary residence. And that would be a use case when the term of that loan could be extended, which effectively means that those monthly or quarterly payment amounts are going to be lower than they would otherwise be if it was a 5-year term. Okay, so now let's talk about another common use case, multiple solo 401k loans. So our plan is not going to limit the solo 401k owner to just one loan. But that means if they end up taking more than one solo 401k loan, they're going to need to consider these multiple solo 401k loan rules. So here we've got a good FAQ to illustrate some of these rules. So if I previously took a solo 401k loan within the last 12 months, will that impact how much I can take now? So under the multiple loan rules, the sum of the balance of the outstanding loans using the highest outstanding balance of each loan over the last 12 months can't exceed 50% of the overall solo 401k account balance or $50,000, whichever is less. So for example, if the highest outstanding balance of your existing loan over the past 12 months was $25,000, let's say somebody took a $25,000 solo 401k loan 6 months ago. They've been paying it down according to the payment schedule. So the balance now is less than $25,000, but the highest balance 6 months ago was $25,000. And now they want to come back and take a second loan. So that means that the most that they can take as a second loan is $25,000, right? Because it's 50% of the balance, or $50,000. So assume that they have at least $100,000 in account value of their solo 401k plan. So $50,000 then less $25,000, which was the highest outstanding balance, means they could only take another $25,000 loan. And note that that rule applies even if they ended up paying back that first loan. So again, let's stick with the scenario where 6 months ago, the solo 401k owner took a $25,000 loan. Let's say after 4 months, they paid it back, right? Then in month 6, right? So 6 months after they first took that $25,000 loan, now they want to come back and take another loan. So the question becomes, okay, well, I'm ready to take a $50,000 loan now, right? The answer is no, that can't be done, because you have to look at the highest outstanding balance of each loan over the last 12 months. So the highest outstanding balance of that first $25,000 loan was $25,000. So it doesn't matter that right now the balance is zero. You take the highest outstanding balance over the prior 12 months. So that means in month 6, even though that person had already paid back that first loan, they're only going to be able to take another $25,000 loan. And we're helping our clients work through these multiple loan rules, but it's good to introduce the topic so that we can all start to understand it. So now let's turn to just a number of solo 401k loan frequently asked questions to really illustrate the different use cases, some of the edge cases, etc. So do I make solo 401k loan payments to myself? So if I take a loan for my solo 401k, am I paying the interest to myself, correct? Not paying it to someone or another institution, right? So when a solo 401k owner takes a solo 401k loan, the solo 401k owner is certainly not paying it to another institution or to us as the solo 401k plan provider. Remember, the loan is coming from the solo 401k owner's own 401k account, right? It's not coming from a third party or us, etc. So that means that when the solo 401k owner makes those loan payments are deposited into their own solo 401k account, right? The same account from which they took the loan. So the solo 401k loan owner is paying the loan back to their own retirement account. You could think of it as they're paying it back to their future self, right? Since this is their 401k. Next common question: is there a solo 401k loan prepayment penalty? So no, there is no prepayment penalty for a solo 401k participant loan. So you can certainly pay it back early and without being subject to penalty. Here's another good common question, because we have a lot of folks that don't just have pre-tax money in their solo 401k, they may have Roth money, right? Because our plan not only allows for pre-tax contributions, but also Roth and even mega backdoor Roth contributions. So here the scenario presented is when it says that you can take up to 50% of the account balance as a loan with a max of $50,000, does that mean that 50% of the Roth solo 401k subaccount or 50% of the total value of the solo 401k plan? So the answer is that assuming that a solo 401k owner or participant didn't have any other outstanding solo 401k loan within the prior 12 months, remember the multiple loan rules, the full $50,000 solo 401k loan could be taken from the Roth subaccount. So that's assuming that the total value of the solo 401k plan is at least $100,000. Then the individual could just take the $50,000 loan from their Roth subaccount. So let's assume, for example, that the person has $100,000 in their pre-tax solo 401k subaccount and $50,000 in the Roth solo 401k subaccount. So the total value is $150,000. So if that person hadn't taken a solo 401k loan within the prior 12 months, they'd be able to take $50,000 and they could take it all just from one account. In other words, you don't have to run that 50% calculation on each sub account. It applies at the entire plan level. So, just furthermore, based on the answer here, in calculating the maximum loan that can be taken, one considers the total value of the solo 401k, i.e. the sum of the solo 401k pre-tax and Roth solo 401k sub-accounts. Once one has determined the maximum loan amount, one may take the full loan from any sub-account, right? A full $50,000 loan may be taken from the Roth solo 401k sub-account. If the solo 401k owner participant elects to borrow from both the pre-tax solo 401k sub-account and the Roth solo 401k sub-account, this would have to be structured as two separate loans, one from the pre-tax and a second from the Roth, right? So back to that simple example, right? Say $100,000 in the pre-tax, $50,000 in the Roth. You add both together to determine the overall value. 50% of that is how much they could be taken, not to exceed 50,000. So we already addressed that the full 50,000 could be taken from just one, like the Roth account. Or if the person wants to take money from both the pre-tax and the Roth, let's say 25,000 from each, that would need to be drafted as two separate loans. And the person would need to be paying each loan back to each respective sub-account, right? One payment stream back to the pre-tax, a second payment stream back to the Roth. Okay, next question to illustrate just the frequently asked questions and a lot of these use cases that our clients are using the solo 401k loan for. Can a solo 401k loan be used to buy a business? Can I take a solo 401k loan to buy my own small business as a side gig? So the answer is yes, as long as you have no full-time W-2 employees working for any business owned by you or a spouse, if any. So obviously you can't buy a business that has non-owner, non-spouse, full-time W-2 employees and just keep that solo 401k going, right? Even if you've got a separate business with no employees that sponsors the solo 401k. But assuming that this is not going to, be a business with those non-owner, non-spouse, full-time W-2 employees, again, one can use the proceeds of the loan for any purpose whatsoever, including buying a business. But that, is going to bring up other issues, which we're going to talk about here in an FAQ right after this. So the flip side of this question is, can I make a solo 401k loan to my own self-employed business, right? So we talked about how the individual could borrow from their own solo 401k as step one, right? With their personal loan from their 401k, then use the proceeds, step two, to personally buy a business from someone else. But now what about the scenario where I want to lend the money from my 401k to my own business, right? So here the question presented is, I have some clients that are asking me about the solo 401k loan process to lend from your 401k to your business. Can you please let me know the process, cost, and what you need from me to lend the money to my business so that I can deduct the interest? So unfortunately, the solo 401k loan rules don't allow for loans to the solo 401k participant's business, even by way of a solo 401k participant loan. So in other words, the solo 401k participant loan would be to the solo 401k participant, not his or her business. As a result, the interest on the solo 401k participant loan could not be deducted by the participant or his or her business. So while the borrowed funds could be used for any purpose, including for your business, the participant loan documents are required to be drafted as a solo 401k participant loan to the solo 401k participant, not the business. So in other words, right, because remember, you are literally taking money out of your 401k. So that's going to look like a taxable distribution. But there is an exception, the 401k loan exception, where if it's within the terms, right, 50% of the balance, not to exceed $50,000, right, it's drafted as a loan, it's paid back in monthly or quarterly payments over a 5-year term, et cetera, then that loan is not going to be considered a taxable distribution. So there's an exception for a loan to the solo 401k participant, but there's no exception under the rules that would otherwise consider that to be a taxable distribution that would allow one to lend money to the business that sponsors the solo 401k. So the exception only applies to loans to the participant. So if the proceeds of the solo 401k loan to fund my business, or maybe it's used for a personal investment, so if I use the proceeds for that purpose, is my obligation to pay back the loan contingent on the performance of the investment, right? So this is where it's really important to recognize that it's two separate transactions, right? Some folks will say, great, I'm hearing that I can use my solo 401k funds to fund my business. I just need to structure it as this solo 401k participant loan. But this question really highlights that it's really two separate transactions, because no, you cannot make the obligation to pay back the loan contingent on the performance of your business or the investment. The solo 401k owner must pay back the loan according to the payment schedule, regardless of the performance of the subsequent personal investment or use of the solo 401k loan proceeds, right? Some folks will say, hey, I've got this real estate project that I'm personally invested in, and I just need another $50,000 to be able to finish it. Then it's going to, I'm going to be able to sell the property, and then I'll take the proceeds and I'll pay back my solo 401k loan. And so that might be a 6-month time frame before the money comes back, right? In the intervening period, that solo 401k owner is going to need to pay back that loan according to the payment schedule, because even though they can use the proceeds for any purpose whatsoever, their obligation to pay back the loan continues according to the payment schedule, regardless of what they use the proceeds for. Okay, great. So now let's keep going with some very common questions and that we're hearing from all of our solo 401k clients that are using the solo 401k loan feature. It's like one of the most popular features. So we have a number of frequently asked questions to go through. So here the question is, solo 401k loan reported to credit report. Will a credit check be needed to take a solo 401k loan? And then if I default on the loan, will this be reported to the credit bureaus? So the answer is no, right? The fact that one takes a solo 401k loan is not reflected on that person's personal credit. So when a solo 401k owner takes a solo 401k loan, the funds are transferred out of the solo 401k account to the account of the solo 401k participant. There's no credit check. The repayment of the loan is not reported to the credit bureaus. So it's totally off the radar of the credit bureaus. So solo 401k loan payment grace period. So another common question. What is the solo 401k loan grace period, right? We talked about how, as part of our service, we prepare the payment schedule, right? Monthly or quarterly up to the solo 401k owner. Payments over a 5-year term, unless it's going to be used for to purchase a primary residence, right? The solo 401k owner's primary residence, in which case it could be longer. But in either case, we're going to be preparing that payment schedule. And that loan needs to be paid back according to the payment schedule, regardless of what the proceeds are being used for. But there are instances where individuals might miss a payment or make a late payment, let's say. So the question becomes, okay, well, how much time do I have to make up that missed payment? So the solo 401k participant loan grace period does allow for the missed loan payment to be made by the end of the quarter following the quarter of the missed payment. So for example, if the solo 401k participant loan is being paid back on a monthly basis and the monthly scheduled payment was due on July 15th, but the payment was missed, the missed payment would need to be made by December 31st, right? The end of the grace period. So we have some examples here, right? Missed loan payment due in February. The grace period, again, is the end of the quarter following the quarter of the missed payment. So that payment due in February was due in the first quarter. So the grace period is the end of the second quarter. So that would be June 30th. And then, of course, by June 30th, all of those payments that were due all the way through the end of the first quarter would need to be made up. And then you can see we got other examples to really illustrate that same rule, right? So hopefully that helps and makes sense. Okay, but let's say that I'm not able to make the payments by the end of the grace period. What happens if I don't make the loan payments within the grace period? So if a solo 401k loan is defaulted, the loan value at the time of the default is taxable and reported to the plan participant and to the IRS on IRS form 1099-R, right? That's going to be reported as a taxable event. So if I previously defaulted on a 401k loan, right? Let's say that someone took a solo 401k loan, defaulted on it, it was reported on the 1099-R, et cetera. Now they want to come back and take another loan. So defaulted loans will impact the ability to borrow more funds from the solo 401k. Essentially, even though the loans that are in default will be treated as distributions, the outstanding solo 401k participant loan balances will be taken into account in processing and in calculating the maximum amount of any subsequent solo 401k participant loan. The unpaid amount of the loan that went into default, including accrued interest, is considered outstanding for purposes of determining the maximum dollar amount of any subsequent solo 401k participant loan. So it'll reduce your ability to take another loan. Can I take a solo 401k loan if I already have a loan from my regular day job 401k? So here the question is, I have a day job 401k, and I've already taken a 401k loan from that day job plan. I have a solo 401k for my side business. Can I take another loan from my solo 401k? The answer is certainly. It is acceptable to take loans from both plans because you're not the owner of the employer that sponsors your day job plan. In other words, it's not a control group, right? If you own the business that sponsored, if you were the 100% owner of that business that had the quote day job plan, and then you also had a solo 401k, then you would have to consider it. But here, we're assuming that it's typical, someone has a W-2 job and they've also got a side gig, right? So they could technically have $50,000 loans, like subject to the limits, et cetera, from both plans. Another common scenario that we see, restate solo 401k with solo 401k loan. So here the question is, I'm restating an existing solo 401k plan, right? Let's say that they had a basic plan at Vanguard or Fidelity or Schwab to my solo 401k, and there's an outstanding solo 401k loan. Do I have to pay back that loan as a result of the restatement? So if the existing participant loan is held in another solo 401k, yes, it can also be moved to the new solo 401k. So in other words, you wouldn't have to fully pay it back as part of the restatement. So that loan could be moved over, right, and continue to be paid to the restated plan through my solo 401k. So you would continue making the loan payments pursuant to that initial participant loan payment schedule. So as part of just practically speaking, it's going to be prudent and a good idea to go ahead and make sure that you've located that payment schedule. Because if you were to restate the plan and then say a few months later, now you want to go back to the prior plan provider because you can't find the loan payment schedule, then it might be difficult for them to dig it up. Whereas if you find it, and then if you can't find it as part of the restatement, you get it while your account is still, you ask the existing plan provider, the pre-existing plan provider to provide you that loan payment schedule again. It's going to be much easier to do that while you're still an account holder. So former employer plan with a 401k loan. So here I'm rolling over a former employer 401k to my solo 401k plan with my solo 401k financial, and there's an outstanding 401k loan. Can I transfer the 401k loan to my solo 401k? So while our solo 401k plan would allow a loan to be transferred from a former employer plan, most former employer plans do not allow for the transfer of a 401k participant loan. So if you had a job and you had a 401k loan and then you left that job for whatever reason, right? Then it's going to depend on your former employer's plan rules and how that plan was set up. There's different scenarios, right? Sometimes as soon as you leave, the loan becomes immediately doable. Sometimes they can allow you to continue to pay that loan back, but it's very rare that they will allow you to roll over not only the cash that's in your solo 401k, but also roll over the 401k plan and continue to pay it to the new plan provider. Like if you rolled it over to your new solo 401k, that would be very unusual. Although theoretically it could be done, our plan could accommodate it, but that would also require that the former employer plan allow for it to be rolled out. crypto solo 401k loan. So our plan allows for investing in alternative investments, right? Real estate, crypto, private placements, etc. So we have a number of clients that are invested in cryptocurrency. Here, the question is, my solo 401k is currently invested in Bitcoin. I would like to take that crypto out as a loan to myself and then make monthly payments back, including interest to myself, right? Presumably they mean their solo 401k. Is it possible to loan the Bitcoin directly without having to liquidate it to cash first? So in short, no. The 401k loan rules provide that a participant may withdraw cash in the form of US dollars, subject to certain limits, right? Like the 50% of the balance, not to exceed $50,000, the repayment requirements, etc. And if properly documented as a loan and paid back according to the payment schedule, the withdrawal is not subject to taxes or penalties. Remember, looks like a distribution, but there's an exception to those taxable distribution rules that would allow, if it's a 401k loan, it's within the limits, it's paid back according to the payment schedule, where it's not going to be considered a taxable distribution. But you have to fit within that exception in order for it not to be a taxable distribution. So the exception is for a loan of cash in the form of US dollars, not in the form of Bitcoin. So therefore, these loan rules would not allow one to withdraw a solo 401k asset, here, Bitcoin, as a loan, including a digital asset like cryptocurrency, which is treated per the IRS as property, not cash. Therefore, one may not borrow Bitcoin held in their solo 401k plan as a solo 401k loan. Solo 401k loan payments tax deductible. Can I deduct the interest paid on my solo 401k participant loan on using Form 1098? So Form 1098 does not apply to solo 401k participant loans because interest paid on a solo 401k participant loan is not tax deductible. So it would not be applicable. Are solo 401k loan payments included in solo 401k contributions? So here the question is, I took a solo 401k participant loan and I'm also making solo 401k contributions. Are my solo 401k loan payments included in the contributions? So the answer is no, right? The loan payments are not included in contributions. Solo 401k annual contributions, that's where one is taking their self-employment income and contributing it, depositing it into their solo 401k. Those solo 401k contributions cannot be used or applied towards the payment of a solo 401k participant loan. Solo 401k participant loan payments must be made, of course, with personal funds, not business funds or solo 401k funds. So if you have $50,000 loan, you've got your payment schedule, and you're also depositing money as a contribution, those are two separate things, right? You can't double count it or blend it or mix it, right? It's two separate things. Hopefully that makes sense. So that takes us to all the FAQs we wanted to share. Again, thank you so much for all your good participation. Please like, please subscribe to get notifications. Please join us on our community. We go live every day at 1 p.m. Pacific, 4 p.m. Pacific. All are welcome. It's free to join. We also have forums. We have a deep dive library of webinars and videos. So there's lots of great ways to learn and to share the knowledge. I want to go through the questions that were chatted up in the meantime, like while we went through those slides. Thank you so much for your patience. We'll get those on the screen here now. Also, just to highlight, that we do at least weekly, sometimes twice a week webinars on the YouTube channel. So please subscribe. You get all the notifications. You can come back later and watch the recordings. So thank you so much. So here the question is, I have a defined benefit plan. I'm getting out of that and need to get into a solo 401k. The defined benefit plan owns an LLC with real estate. What do I need to transfer rollover that LLC into your solo 401k? So, and it sounds like it's in California. So you would need to, and that's very common, right? That we're helping clients roll over assets from pre-existing retirement accounts to their solo 401k. So at a high level, one would need to obtain the forms that the defined benefit plan provider needs to initiate a direct rollover And it sounds like the real estate is held in an LLC owned by the solo 401k. So really the asset that's being transferred over is the membership interest in that LLC. So now the sole member of the LLC is going to be the solo 401k. So there would have to be an assignment. The defined benefit plan provider is going to need to report that. So that's why they need their form to be completed. And then we would work with the client to help get that completed. So the defined benefit plan provider knows that this is a non-taxable direct rollover. As far as the real estate itself, if it's titled in the name of the LLC, it would still be held in the name of the LLC, even if the owner of the LLC is changing from the DB plan to the solo 401k. Thank you so much for joining. Thank you so much for the good questions. Great question. So we charge a totally flat fee structure, right? It's not based on the value of the account or the service, the support that's needed, right? It's totally flat. So it's $650, which includes the $525 establishment fee plus the first $125 annual fee. And that would be even if there's two participants in the plan, like a husband and wife that they're both working in the business, even if you got multiple sub accounts like pre-tax Roth and mega backdoor Roth. Starting 12 months later, we charge our annual fee, which is $125. So if someone were to sign up now, it would be this time next year that the annual fee would be due. And then on top of that, our plan it would make the solo 401k owner, that self-employed person, eligible for a $1,500 solo 401k tax credit. So that's $500 per year over 3 consecutive years, which is going to more than offset the cost to set up and maintain the plan with us for the first 7 years. So the impact is tremendous in terms of the cost. Thank you so much. After I contribute into full Fidelity Solo 401k pre-tax account through your plan, can I invest in any stock I want? Unlike direct solo 401k that does not allow. Absolutely, yes. The type of accounts that we're helping our clients set up, right? Whether it's Fidelity or Schwab, just to give a couple quick examples of the brokerage firms. These are free accounts. There's free online trading. The brokerage firm doesn't charge any maintenance fee. There's no setup fee. And they can be invested in a wide range of investments, right? It's going to parallel an IRA. So it'd be just like an IRA, say at Fidelity, where you could buy stocks, bonds, mutual funds, ETFs. So what I would do is send a secure message to Fidelity and just have them direct you to exactly where you need to go on the website to start investing in what you're looking to invest in, right? You give an example of what you're looking to invest. Or if you're having problems, don't hesitate to reach out to us and we can help guide you through that process. So thank you so much for the good question. Do I need to withdraw money from my solo 401k to invest or invest directly in stock? Well, if you want to invest in stock at Fidelity, we're talking about publicly traded stock, then it would be done through that Fidelity account. If the individual wants to invest in a true alternative investment, it could be private stock, right? Or real estate or something like that, the money would leave Fidelity. Now, with the type of accounts that we're helping our clients set up, it comes with a free checkbook. You can also wire money out of that Fidelity account. So that's ways that individuals are taking money out of their Fidelity account to make those alternative investments. But then on top of that, you could also open up a bank account, and we help our clients do that. So we have plenty of clients that have both bank accounts as well as brokerage accounts. And for those clients that are really looking to invest in true alternative investments like real estate, et cetera, based on experience and client feedback, a lot of them find that it's best to have a bank account because now they have access to not only a checkbook like at Fidelity and a wire like at Fidelity, but also a debit card, but also certified bank checks, the ability to ACH funds easily in and out of the bank account. Thank you for bringing the good questions. How are your clients best utilize the plan? Do they take out a loan and invest it somewhere else, or what do most do? Well, it really runs the gamut. I mean, we have thousands and thousands of clients, and we see many different use cases. I would say for those clients that, like, if they really want to own the property or they want to be able to work on the property, using real estate as an example, then they would not be able to do it through their solo 401k, right? Because if you invest in real estate through your solo 401k, the property has to be titled in the name of the plan. It has to be a totally passive investment. The individual can't work on the property, etc. So if the individual wants to own it in their name or does want to work on it themselves, let's say they have skill, they're a carpenter or something like that, then investing directly through the solo 401k would not be consistent with the rules, but they could take that 401k loan, like we talked about, step one, where it's a personal loan to them, and then use the proceeds for any purpose whatsoever, including funding their own personal investment property. But keeping in mind that the obligation to pay back that loan is not going to be dependent on what they use the money for, right? So in other words, they got to pay it back according to the payment schedule regardless. So thank you so much. Like if you signed up on the StreamYard, you'll get an email afterwards and a link to the recording. Or you can also go to the YouTube channel, as it'll be posted there as well. Well, thank you so much for all the great participation. We do appreciate it. Please continue to participate on our community, for example, mysolo401k.net/my-community. On the YouTube channel, please subscribe. You get all the notifications. And of course, we'll be back next week to continue going over these topics and many other topics. So thank you so much, everyone. All the best.